Good morning. Today, we're diving into a story that shows just how interconnected our world has become, where decisions made in one country can have ripple effects thousands of miles away. We're exploring how a recent U.S. government shutdown sent shockwaves across the Atlantic, forcing Colt CZ Group, a major firearms manufacturer with deep roots in both Europe and America, to rethink its financial goals for the year. This story isn't just about numbers on a balance sheet. It's about how political decisions in Washington can disrupt production schedules, threaten jobs, and shake up global business operations in ways that are often unexpected. Colt CZ, renowned for its iconic handguns and rifles, found its careful planning and forecasts suddenly upended by forces far beyond its control, demonstrating how even the most established companies can be vulnerable to political turbulence. The delay in expected revenue highlights just how dependent even global companies are on government processes, not only for securing contracts, but also for the basic flow of commerce, licensing, and international trade. When a company of this stature is forced to adjust its financial forecast, it sends a clear signal to the entire market sector, prompting investors and competitors alike to reassess their own strategies and expectations. The core issue here is that revenue isn't lost forever, it's simply delayed, pushing anticipated income into the next financial year. But even this kind of delay can shake shareholder confidence, disrupt strategic planning, and create uncertainty for employees and partners. Ultimately, this story is a powerful real-world example of how politics and economics are deeply intertwined, affecting not just companies and their employees, but entire markets and communities around the globe. It's a reminder that in today's world, no business operates in isolation. So, who exactly is Colt CZ Group, and how did they become such a major force in the global firearms industry? Colt is a legendary American brand, with a history stretching back to the 1800s, while CZ is a renowned Czech firearms manufacturer, known for its innovation and precision. Their merger in 2021 created a true transatlantic powerhouse, combining centuries of expertise and producing everything from iconic civilian pistols to advanced military rifles used around the world. The United States is not just their largest market, it's the heart of their business, making them both incredibly strong and uniquely vulnerable to shifts in American politics and regulations. By acquiring Colt, CZ gained direct access to the vast U.S. market and lucrative military contracts, solidifying its role as a key supplier to NATO allies and major defense organizations worldwide. Their diverse product lineup serves civilians, law enforcement agencies, and military clients alike, helping balance their business, but also exposing them to disruptions in any of these sectors. With thousands of employees and operations spanning multiple continents, Colt CZ's financial health is often seen as a barometer for the broader firearms industry and its global trends. Their ongoing success depends on a stable business environment. Recent events have shown that even industry giants can be shaken by political turbulence and sudden regulatory changes. Now, the company faces the complex challenge of steering through these disruptions, maintaining investor confidence, and continuing to innovate in a rapidly changing world. How does a U.S. government shutdown impact a Czech company? It's all about bureaucracy. Even companies thousands of miles away can feel the ripple effects of political gridlock in Washington, D.C. In today's globalized world, the actions of one government can have far-reaching consequences for businesses operating on another continent. Many of Colt CZ's sales, especially to military and law enforcement, require U.S. government licenses and approvals. These aren't just routine rubber stamps. They're essential for legal exports and contracts, and the process is tightly regulated. When the government shuts down, these processes stall. Employees who handle paperwork and payments are furloughed, creating a bottleneck. No one is there to review documents, sign off on shipments, or process payments, so everything grinds to a halt. For Colt CZ, this meant revenue expected in late 2025 was stuck in limbo. The company had planned for this income, counting on it to meet financial targets and satisfy shareholders. The products were ready, but final sign-offs couldn't happen, delaying income into 2026. Goods sat in warehouses, unable to move, while the company waited for the green light from U.S. officials. Imagine baking cakes for a December event, only to be told you can't deliver, or get paid, until January. The work is done, the costs are incurred, but the reward is out of reach. The costs are booked, but the income is delayed. This creates a cash flow crunch, making it harder to pay suppliers, invest in new projects, or even cover day-to-day expenses. For a public company, this timing mismatch is a major headache, forcing a downward revision of their 2025 outlook. Investors and analysts watch these numbers closely, and any unexpected change can trigger concern. Investors had counted on that revenue. The sudden shift can rattle stock prices and confidence, even if the business itself is strong. Market reactions can be swift and sometimes harsh, regardless of the underlying fundamentals. The company clarified, the revenue isn't lost, just delayed. But in the world of finance, timing is everything, and delays can have real consequences for planning and perception. But this disruption is a perfect example of how political events can directly interfere with global business operations. International companies must constantly adapt to shifting regulations, unexpected delays, and the unpredictability of government actions. It's a reminder that even the best-laid plans can be upended by external forces. In a connected world, no company is truly isolated from the political winds that blow across borders. Let's look at the numbers. After the US shutdown, Colt CZ revised its 2025 revenue forecast to between 23 and 24.5 billion Czech crowns, about $1.10 to $1.17 billion. This drop directly reflects sales pushed into the next year. Profit expectations, measured by EBITDA, are now set between 4.5 and 4.8 billion crowns, 229 million. The lower profit is due to costs already incurred in 2025, while the matching revenue is delayed. By providing a range, the company signals ongoing uncertainty, but aims for transparency with investors. Despite the adjustment, Colt CZ remains a major economic force. The revised forecast isn't a sign of failure, but a snapshot altered by timing. The key now proved the company's foundation is solid heading into 2026. To see the impact, compare the new forecast to the old. Before the shutdown, Colt CZ aimed for 25 billion crowns in revenue, a higher target than the revised range. The original EBITDA goal was about 5.5 billion crowns. Now, it tops out at 4.8 billion. That's a drop of at least 700 million crowns, or $33 million in profit. The costs were already booked, but the revenue to offset them is postponed, hitting profitability. Analysts call this a guidance cut. Never good news, but the reason matters. External shocks are less worrying than internal missteps. The focus now, how quickly Colt CZ can recover the deferred revenue in 2026. Despite the gloomy year-end forecast, the first 9 months of 2025 showed strong performance. Revenue rose 7.3% year-on-year, reaching 16.07 billion crowns, 766 million. Growth was driven by booming ammunition sales and the full-year inclusion of an acquired company. Adjusted EBITDA jumped 13.6% to 3.43 billion crowns, 164 million, outpacing revenue growth, a sign of strong management. The company's growth strategy, combining organic expansion and acquisitions, was working. The revised forecast is due to a specific late-year disruption, not a fundamental business problem. The underlying operations remain sound. It's a case of a strong year marred by a tough final quarter. There was one weak spot. The number of firearms sold dropped 10.4% compared to 2024. How did revenue rise? The answer: product mix. Fewer units, but more high-value items and strong ammunition sales. The U.S. commercial firearms market is cooling after years of record demand, a trend seen across the industry. CEO Radek Musil acknowledged these challenges, noting competitors face similar declines. The company is responding with new strategies, possibly marketing, product launches, or pricing adjustments, to defend its market share. This proactive approach reassures investors. The dip in units sold is a reminder to watch underlying trends, not just top-line revenue. Colt CZ is adapting to a more competitive, price-sensitive environment. The company's resilience will be tested as the market shifts. Colt CZ's challenges reflect broader industry trends. The U.S. commercial market is cooling, and competitors like Smith & Wesson and Ruger report similar slowdowns. The firearms market moves in cycles. After years of high demand, normalization is here. The government shutdown is a cautionary tale for any company relying on U.S. contracts. Defense, aerospace, and tech firms all face similar risks from political impasses. The lesson: companies need financial cushions and contingency plans for government delays. Industry groups may push for legislative fixes to keep essential government functions running during shutdowns. The impact on Colt CZ highlights a systemic risk to the defense supply chain and national security. What's next for Colt CZ and the industry? The immediate test recovered delayed revenue in early 2026 to prove this was a timing issue, not a deeper problem. The company's diversified strategy, strong ammunition sales, and global military contracts will help offset U.S. market softness. For the industry, this episode is a reminder that political disruptions must be factored into planning. Companies may change contract structures or build bigger cash reserves to weather delays. The reliability of the U.S. government as a business partner is under scrutiny. Despite the setback, Colt CZ remains profitable and resilient, with management actively addressing challenges. This is a stress test, not a crisis, one that will shape future strategies in an unpredictable world.